Look at NuScale Power Corporation, ticker symbol SMR. I mean, it's plummeted from a 52-week high of $57.42 down to a recent low of $8.85.
Yeah, it's brutal.
Right. And it's currently sitting at about 11.41 cents. So my question for Tho and for everyone listening, is this falling trend a massive sell signal, or is it, a wildly undervalued opportunity?
Honestly, you look at that chart and you are forced to make a binary decision. It's like the ultimate Rorschach test for the market right now.
Yeah.
You either see a catastrophic failure of a business model unfolding in real time, or you see the absolute best entry point of a decade for the future of global energy.
And that extreme tension is exactly why we are tearing into SMR for today's deep dive. We're unpacking the financials, the charts, the massive insider exodus.
Oh, yeah, the insiders.
Right, and a wild mix of political catalysts. I mean, we're talking ranging from an impending lawsuit to literal lunar bases.
It's a crazy mix.
It is. The paradox here is so extreme that before we even unpack the data, please like the video, subscribe to our YouTube channel, and you absolutely must leave your feedback in the comments. We want to know where you stand on this debate because, frankly, the market is completely torn.
It really is. And just to put a pin in the timeline for you guys listening, today is Friday, April 17, 2026.
Yep.
SMR is currently down about 2.56% for the session.
Yep.
And we have to establish up front, this stock is highly, highly volatile.
Definitely.
We're talking about a $3.7 billion market cap that violently whipsaws based on, daily headlines and retail sentiment.
And of course, a quick reminder that this deep dive is a natural debate exploring the facts and the mechanics behind the company. We are looking at data. We are not giving financial advice.
Exactly. No financial advice here.
So let's just start with the hard numbers, because if a company has a 52-week high of over $57 and it's currently trading at $11.
Yeah, quite the drop.
Right? My first instinct is to ask, what happened to the money? What is the actual financial reality of NuScale right now?
Well, you look at their full year 2025 income statement, and it's brutal. Total revenue actually dropped.
Dropped? Wait, really?
Yeah, they brought in $31.48 million, which is down from $37.05 million in 2024.
Wait, revenue shrank. But I thought, small modular reactors were supposed to be this hyper-growth sector.
Well, it's a hyper-development sector. It's not a hyper-revenue one yet. But honestly, the shrinking revenue isn't even the number that's keeping their accountants awake at night.
Oh, boy. What is?
The real shock is the operating loss. It worsened massively to $689.57 million for 2025.
Wow.
Yeah, and back in 2024, that loss was only $138.73 million. So they essentially quintupled their operating burn in 12 months.
Okay, wait, stop right there. $689 million. How do you jump from burning $138 million to nearly $700 million in a single year without having, massive revenue-generating infrastructure online?
It's insane, right?
I mean, what are they physically spending $500 million on?
It really comes down to the staggering reality of commercializing nuclear technology.
Yeah.
You don't just build a prototype in your garage and launch a software update.
Right, it's not a tech startup.
Exactly. That massive jump in operating loss represents intense supply chain commitments. They are paying to forge long lead materials, securing highly specialized nuclear-grade steel.
Which I'm sure is not cheap.
Oh, it's incredibly expensive. Plus, aggressively hiring top-tier nuclear physicists and spending tens of millions on ongoing regulatory compliance. You are essentially paying for the foundational infrastructure of an industry that doesn't fully exist yet.
Okay, that makes sense, but it's still a tough pill to swallow.
It is. And all of that translates to a net loss of $355.79 million, giving us a diluted earnings per share of negative $2.17.
Negative $2.17. Okay, so this sounds like building a hyper-advanced rocket in your backyard, realizing you have no paying passengers yet, and the rocket fuel is costing you roughly $200 million every single quarter.
That's a pretty perfect analogy, actually.
Right. Any normal company with those income metrics would be bankrupt by next Tuesday. So how are they actually surviving? How are they keeping the lights on?
Well, if you only looked at the income statement, you would totally assume they were weeks away from insolvency. But you have to flip over to the balance sheet.
Okay, what's over there?
NuScale is completely debt-free.
Oh, wait. Debt-free.
Completely debt-free, which is super rare for a heavy infrastructure play. And more importantly, they ended 2025 sitting on $1.3 billion in cash and equivalents.
Okay, hold on. How is that mathematically possible? You just explained that they are hemorrhaging cash and their revenue is actually shrinking.
Yeah.
Where does a $1.3 billion war chest come from?
It comes straight from the public markets. In the fourth quarter of 2025, they utilized what is called an at-the-market program, or an ATM, to raise $750 million.
Okay, let's unpack this ATM mechanism for you guys listening, because it's not like going to a bank for a traditional loan. With an ATM, they basically have an open spigot directly connected to the stock exchange, right?
Yeah, that's a good way to picture it.
Like, they hit a button, create new shares out of thin air, and just sell them at whatever the current market price is.
That is precisely the mechanism, yeah. It allows a company to raise capital quietly over a period of time rather than doing one massive, heavily publicized secondary stock offering that might panic investors.
Ah, so it's a bit stealthier.
Right. They secure the necessary runway to keep developing their reactors. However, the trade-off is severe dilution.
Because there are way more shares out there now.
Exactly. The underlying value of the company might remain the same, but by flooding the market with new shares, they are spreading that value across a much larger pool. So they bought themselves time, but they heavily diluted the existing shareholders to do it.
Okay, so they essentially printed their way to a $1.3 billion safety net. That buys time, but if the market genuinely believed in what they were building with that cash, the chart wouldn't look like a ski slope.
No, it wouldn't.
So what is the actual tape showing us right now? Like the chart and the order flow?
Well, the tape is showing immense stress right now. The stock is trapped in a weak, falling channel downtrend. We're watching two critical support levels, $11.33 and $10.19.
Okay, let's translate that $10.19 support level into, like, human psychology, because that's not just a random line on a chart.
Right, no, it represents the point of market capitulation. Support levels are the price points where buyers previously stepped in, looking at the stock and thinking, this is fundamentally too cheap to pass up.
The bargain hunters.
Exactly. So if the price falls below $10.19, it means those bargain hunters have completely vanished. Technical analysts see a break below that line as a major flashing sell signal because it implies there is literally no visible floor underneath the price.
Yikes. So is there any upside resistance where we might see some signs of life?
Resistance sits right at 11.55 cents. Breaking above that line could show a genuine trend shift. But the momentum indicators are really conflicting right now.
How so?
Well, the Relative Strength Index, the RSI, is hovering around neutral to slightly oversold. RSI measures the speed of price movement, so it essentially asks if a stock was punished too fast by sellers.
Okay.
Meanwhile, the MAN-CD shows a buy signal on the 3-month time frame. However, the overall long-term moving average remains way above the short-term average.
Yeah, so that's a broad sell cross.
Correct. The 200-day moving average is higher than the 50-day moving average. It tells us that the dominant structural trend is still heavily downward, even if there are these little short-term bounces.
And the order flow confirms this negative sentiment, right? Like,
Yeah.
Who is actually moving these shares?
We see very heavy sell pressure sitting right above us between $13 and $15. Every single time the stock tries to rally into that zone, large holders just offload their positions to break even or cut their losses.
So it just hits a ceiling?
Yeah, a massive ceiling. Buying interest only seems to really step in down near that $9 to $10 range. But the most aggressive dynamic on the tape right now is the short interest.
Oh.
Currently, 20.52% of the entire tradable float is sold short. That is 53.54 million shares actively betting that this company is going to fall further.
Wait, hold on. 20% short interest on a company holding $1.3 billion in cash? That seems incredibly risky for those short sellers.
It is a massive gamble.
Because with 2.73 days to cover, meaning it would take almost 3 full days of nonstop buying for shorts to exit. Aren't they terrified? I mean, if NuScale drops one massive piece of positive news, those short sellers have to scramble to buy back 53 million shares simultaneously. That's the exact recipe for a violent short squeeze.
The short sellers are absolutely taking a calculated risk here, but they are making an educated bet against that massive $689 million operating loss we talked about earlier.
They think the cash will just burn up.
Exactly. They believe the $1.3 billion cash pile will evaporate faster than the company can deploy actual reactors. But honestly, the short sellers aren't the most alarming signal on the tape.
Wait, there's worse.
The real concern is what the people inside the company are doing.
Oh, yeah. Here's where it gets really interesting, folks. And this is probably the most glaring data point we have. Insiders recently sold over $162 million in shares.
Yeah, that is a huge number.
And meanwhile, net insider buying puts NuScale in the bottom 1% of all tracked stocks. I mean, think about it. If I am eating at a restaurant and I see the head chef sneaking out the back door with his own life savings, why would I order this soup?
Right. It's the ultimate red flag for retail investors.
But let me push back on that for just a second. Insiders sell stock for lots of reasons, right? I mean, they have to pay taxes, they want to buy a house, they need to diversify their portfolios. Does $162 million in sales really prove they've lost faith in their own tech?
Well, it is true that insiders sell for various personal reasons,
Right.
but you really have to look at the ratio here. Bottom 1% in insider buying.
Yeah, that's rough.
If the executives steering the ship truly believed that their $11 stock was inevitably going to rebound to its $57 high
Mm,
because they possess, the ultimate energy technology of the future,
yeah,
you would see aggressive open market buying from the C-suite.
they'd be loading up.
Exactly. They would be capitalizing on the low price. Instead, the net movement is overwhelmingly toward the exits.
Which really forces us into the central debate of this deep dive. You have executives dumping shares, the fundamental numbers look awful, but the stock is down drastically from $57.42. So is a retail trader getting a rare bargain here, or are they walking blindfolded into a value trap?
If you judge NuScale by standard present-day valuation metrics, it is unequivocally a trap.
Okay, tell me why.
Well, the stock currently trades at a price-to-sales ratio of 60.9x.
Okay, let's put a 60 times sales multiple into perspective for a second. A mature, highly profitable juggernaut like Apple or Microsoft might trade around 7 or 10 times sales.
Right.
And a hyper-growth software company with virtually zero overhead might trade at 20 times sales. NuScale's a heavy industrial infrastructure company, burning cash with shrinking revenue, trading at 60 times sales.
It's hard to wrap your head around.
It is. That is the equivalent of buying an empty dirt lot in the desert for Manhattan real estate prices, purely because someone started a rumor that a major highway might be built there in 10 years.
That analogy perfectly captures the premium being charged here. Based on the reality of 2026, NuScale is wildly overvalued. Yet, here's the paradox that confuses so many investors.
What's that?
The average consensus price target from Wall Street analysts is actually $20.96.
Wait, so what does this all mean? Wall Street acknowledges the company is trading at an absurd 60 times sales, yet they are stamping an implied 83% upside target on it? Are the analysts hallucinating, or how do they mathematically justify $20.96?
They justify it through what they call fair value models, which rely heavily on discounted cash flow projections for the 2030s.
So way in the future.
Exactly. Analysts are creating these elaborate spreadsheets modeling the global deployment of modular reactors 10 years from now. They estimate those future multi-billion-dollar cash flows and mathematically discount them back to today's value. So they aren't valuing the company NuScale is today. They're valuing the dominant energy monopoly NuScale might become a decade from now.
Assuming they survive long enough to see that decade.
Right. That's the big if.
Although I do see some of the major banks are starting to rein in those expectations, like UBS recently set a target of $13, and Goldman Sachs is at $14, which is, far less euphoric than $20.
Yeah, the larger institutions are definitely beginning to heavily factor in the recent stock dilution and that severe cash burn. But this massive divergence between terrible current financials and sky-high Wall Street price targets is exactly why retail traders get trapped.
The anchoring bias.
Precisely.
You listening to this deep dive right now, if you open a chart and see that the 52-week high was $57.42, your brain intrinsically anchors to that high number. You see it trading at $11.41 today, and human psychology screams, wow, it's on sale. It's cheap.
It is the most common behavioral error in investing. Retail traders assume that because a stock once traded at $57, it somehow possesses this, gravitational pull to return there.
Right, like it's owed that price.
Exactly. They completely ignore the fundamental downside risks. They ignore the fact that the company has structurally changed since it was $57. I mean, they've diluted the share pool, burned hundreds of millions of dollars, and lost revenue. Buying at $11 purely because it used to be $57 is just a recipe for devastating losses.
Okay, so if the math of the present is terrible and Wall Street's targets are entirely based on a hypothetical future, then the stock price today is going to be dictated by specific real-world events. Let's weigh the bear and the bull cases. What is the immediate threat?
The immediate bear case is what we can call the looming cliff. We already know about the chronic $200 million quarterly cash burn, but there is an acute threat arriving immediately.
Oh.
This coming Monday, April 20, 2026, is the deadline for a major securities class action lawsuit.
And this lawsuit is tied to the Entra One project. Let's not just name drop that for our listeners. What actually happened with Entra One that triggered a class action?
So Entra One was supposed to be NuScale's flagship deployment in Utah. A coalition of municipalities originally agreed to subscribe to the power generated by NuScale's planned reactors.
Sounded like a great deal.
It did, but the project collapsed under the weight of economics. NuScale faced severe cost inflation. The target price for power jumped from around $58 per megawatt hour to nearly $90.
That is a massive jump for local towns.
Huge. And as those costs spiraled out of control, the local towns got spooked and they just pulled out of the agreement.
So the lawsuit basically alleges that NuScale leadership misled investors about the viability and the internal cost metrics of that project before it failed.
That is the core of the allegation, yeah. Investors claim they were sold a false narrative on Entra 1's progress, and the market despises legal uncertainty above all else.
Oh, absolutely.
Heading into a lawsuit deadline with a fragile chart is incredibly dangerous. If the news surrounding that litigation breaks badly on Monday, that critical $10.19 support level will likely shatter.
That is a very grounded, very terrifying bear case. But NuScale has die-hard believers for a reason. What is the actual bull case? Because I constantly hear investors talk about their moat.
Their moat is a regulatory triumph that is almost impossible to replicate. NuScale possesses the only small modular reactor design that has been fully certified by the U.S. Nuclear Regulatory Commission, the NRC.
Let's pause on that because I think casual observers underestimate what that actually means. Getting an NRC certification isn't like, getting a municipal permit to build a commercial warehouse.
Not even close. It is a monumental achievement. We are talking about tens of thousands of pages of technical schematics, millions of highly specialized engineering hours, and hundreds of millions of dollars spent purely on regulatory compliance.
It's exhausting just thinking about it.
The NRC is notoriously, exhaustively strict. For NuScale to get the United States government to formally declare, yes, this completely novel nuclear reactor design is safe and legal to build, that creates a decade-long barrier to entry. If a well-funded competitor starts today, they are 10 years behind NuScale just in paperwork.
That is the real aha moment here. The value of this company isn't in their current balance sheet. The value is in that literal piece of paper from the NRC. It's a near monopoly on regulatory approval in the United States.
Exactly. And they are aggressively trying to leverage that international credibility, too. They have the RoPower project actively developing in Romania, which is aimed at repurposing old coal plant sites with NuScale modular reactors.
Okay, so a real-world application.
Yeah, it serves as their vital international proof of concept. But then there's the wildcard catalyst that just dropped this month.
Oh man, the moon base. I love this part. The White House just announced a major initiative in April 2026 for a lunar surface reactor project. I have to be honest, you listening to this right now are probably rolling your eyes.
I wouldn't blame them.
I mean, a company burning cash on Earth is now going to build a nuclear reactor on the literal moon. It sounds like vaporware designed purely to pump up a failing stock. Is there actual physics and government funding behind this, or is it just a shiny press release?
It is totally natural to be highly skeptical. But if you look at the actual engineering requirements for space exploration, a small modular reactor is uniquely suited for the lunar surface.
How so?
Well, you cannot rely on solar panels during the 2-week-long lunar night, right? And you obviously cannot ship thousands of tons of fossil fuels to space. You need highly dense, autonomous, modular energy that physically fits inside a rocket fairing.
Wait, but hold on. Traditional nuclear reactors require massive bodies of water for cooling. There are no lakes on the moon. How does that work mechanically?
Which is exactly why the Department of Defense and NASA are looking at advanced closed-loop SMR designs that use alternative coolants or advanced heat pipes instead of water.
Oh, wow.
Yeah, NuScale's core technology is theoretically positioned to compete for these exact constraints. And there are very real multi-billion-dollar federal budgets attached to this initiative.
But is a lunar press release enough to offset an impending securities fraud lawsuit on Monday? That is a wild dichotomy to process as an investor. Like, we might be sued into oblivion on Earth, but hey, we're going to the moon.
It is the ultimate synthesis of the NuScale paradox.
Yeah.
Political tailwinds for space exploration and next-generation clean energy create an incredibly high upside. A massive government contract could essentially write a blank check to validate this technology.
Right.
But the tension is whether that distant celestial upside is enough to offset the very real earthly hurdles of legal battles and a $200 million quarterly cash burn. You can have the best technology for a lunar base, but if you run out of cash or lose the trust of the capital markets before you get to the launch pad,
The technology doesn't matter.
exactly.
Which brings us to the outlook. Let's pull all these opposing forces together: the $1.3 billion cash pile, the insider selling, the lawsuit, the moon base, and give our listeners a clear picture of the timelines ahead.
So in the short term, over the next few weeks and months, the technical and fundamental outlook is strictly bearish to neutral. The stock is going to remain highly volatile.
For sure.
If the bulls cannot push this price forcefully above that $11.55 resistance level we talked about, technical models suggest a worst-case continuation lower. We could be looking at downside targets between $4.28 and $6.19 over the next 3 months.
That's a steep drop.
And furthermore, we have the next quarterly earnings date rapidly approaching on May 7, 2026. That will force the company to open its books and show the market exactly how much of that $1.3 billion they've already burned.
Okay, and the long-term outlook.
Long term, it is a pure, unadulterated, high-risk, high-reward play. The best-case recovery scenario, the path back to $20, $30 or beyond, relies entirely on executing flawlessly.
A lot of dominoes have to fall.
Yeah. They must avoid catastrophic financial damages in this impending lawsuit, successfully break ground on the RoPower project in Romania to prove commercial viability and secure sustained aggressive U.S. government support. If those dominoes fall perfectly, the 60x sales multiple won't matter because future revenue will explode upward to justify the price.
But if they miss...
If they stumble, that $1.3 billion cash pile is going to vanish very quickly.
So, to summarize the incredible tension of this deep dive, we are looking at a $3.7 billion market cap company that is essentially a walking financial paradox. On one hand, they have a $1.3 billion war chest, the only NRC-certified reactor technology in the country, and literal lunar ambitions.
Yep.
But on the exact same day, they are fighting a massive $689 million operating loss, staring down an impending lawsuit deadline on Monday, and watching their own insiders rush for the exits.
It is a definitively binary outcome. The technology will either become the backbone of the 21st century energy grid, or the stock will become one of the most expensive cautionary tales in Wall Street history.
And as a firm reminder, this deep dive was for informational and educational debate only. No financial advice was given here today. We simply want you to understand the mechanics beneath the headlines. But we do want to leave you with one final provocative thought to ponder as you look at your own charts this weekend.
Absolutely.
If NuScale's small modular reactors are truly the inevitable government-backed future of clean energy on Earth and in space, why are the people inside the company the ones selling their shares?
It remains the multi-million-dollar question that every investor must answer for themselves.
Let us know what you think the answer is. Please like the video, subscribe to the channel, and drop your theories in the comments. We'll see you on the next deep dive.